Okay. Okay, understood. So
Okay,
as
Tamil, you can start.
yeah,
Like,
so we have
say
discussed.
some introduction about yourself and also about the session. Okay.
Okay. So myself Tamil Mani. So this is the Finance Master Club. So we are gonna to be organized some presentation in it. So shall we let we start? So this session is be about SEBI Investor Certification and what are the things that we need to be learned while going for an examination. So let me start. So in this video that I'm going to be cover the interaction, the basic interaction, and then the types of securities, the types of securities market, and the market infrastructure and intermediaries, and next types of risk and mitigation, and how about the Demat account and investment through IPO and trading and settlements, derivative markets and mutual fund and ETFs, and SEBI compliance redressal systems and conclusion. So let me start. So first that we will be starting from the basic. What are securities and what is the securities market? So securities that we know that securities and financial instrument representing the whether it's been equity, debt, or derivatives, and whichever it helps you to turn into the cash. And where you see if the equity is represent the ownership of the company, where is mean the debt is be either it's a bond or debenture, whether way that you need to be repay with an interest amount, and the rights of an asset.
Tamil,
Yeah.
I have a myth. I have a myth that is security is only equity.
It's not only be equity, it's equity, debt, or whichever that you have been able to turn into cash.
Okay, it can be cryptocurrency.
The securities.
Yeah.
Yeah, you can be able to turn into that cash. No, yeah, that's also the securities.
Yes. Yes. Okay. Okay. I have brushed my myth. Okay. Thank you.
Okay. So in where in a derivatives that you are be obligated to buy or not obligated, where in futures that you are be obligated to buy, where in options you no need to. And the types of securities are, as we have said, equity shares represent the ownership of the company. If the company have earned some profit, it gives a dividend to its shareholders, and where they have an voting rights. And depends debt securities where we all knows whether it may either be the bonds or debentures. Mostly the bonds are be the safest one, and why the debentures are be the riskiest. In bonds is mostly given by the government, so it should be where it should be safest. And in the debentures, it should be either given by the governments, but it be very rare. And corporates are used to give the debentures and the and or the financial institutions uh, for raising funds to meet its short-term obligations, and within that maturity period ends, then you'll be get to return your amount. But in debentures there'd be no secured one. Why? Because there had been no collateral with it. So
Debentures.
yeah, depends.
Debentures, no collateral.
No collateral comparison to bond. In bond that you
I
have the collateral. Yeah.
Yeah, I think debentures is also they are also secured debentures, right?
But which you can know, it only be given by governments only. If some of the debentures, compare them to the bonds, the debentures are be the risk.
Oh, I think
In,
I've heard
in
like in types of debentures there are secured debentures as well as unsecured debentures.
yeah. Where in secured debentures, they have been made some. You can be able to convert that into cash within the said amount, but where an unsecured, there be no collateral at all. So that's why
Yes, yes,
compare them to the bonds. Debentures
mm,
have the higher interest rate. Where if someone gives you an interest rate higher, we knows
yes,
that it has an risk also. So
yes,
comparing
yes.
to the bonds.
Risk and return goes simultaneously, right?
Yeah, correct.
Okay, okay. You can continue.
And where we know that And recently, the Tata Motors have been given the debentures. Uh, so that's the examples. Tata Motors have been given, and
Okay,
where the
okay.
government entities wants to raise the amount means that they will go for and bond. And even in India, we are be saying that sovereign bonds, and where in US they say as then treasury bonds is been given to its public to in order to be raised the funds of the company. So next one is an derivatives. So in derivatives, we know futures and options and forward and swaps, and where it's a contract between the two parties, and where the ones is be agrees to buy for from the particular time, and once and options where persons not obligated to buy in the future, but if you need wants to, yeah, you can. And in options, yeah, we know the call option and put option, and buy option, so put option, and put seller. So have you aware of what this four things is be different from? Call buyer, call seller, put buyer, put seller. So let me tell you. Yeah,
Tamil, I think there are three participants, right, in derivative market.
yeah, yeah,
They are writer, buyer, and exchange, right?
seller.
Yes.
Yeah, yeah, yeah.
No, no.
Person, so yeah, correct.
Hello. I'm saying writers, buyers, and exchange. Oh, okay, okay.
Okay. The person, yeah, who put, yeah, the person who made the contract, yeah, called us. So
Okay.
in mutual fund that we know the where the pool of money get it from the investors, and put it that through the in the portfolio management, where it be organized by the professional fund managers. We know there be different types of mutual funds where there is an equity, debt, and a hybrid of both. And where in past few years, mutual funds is been gives an equals returns and to the equity, and it all we needs to know where we want to invest our money in a safer manner, because where it has an higher interest in some banks or be some mutual funds are giving, and where still it's be the riskier one. Sorry. And then the securities market, we know there be two players. One is a primary market, which we also called as a new issue market, and other one is a secondary market, and where it's been the after issue market. So it's both for helps to raising the companies, where the companies issue their shares for the first time. They go for a primary market, and after it be traded on the secondary market. And in primary market, where the parties are be the companies and then investors. And after once it be started to trade in the secondary market, uh, the persons get invest the person gets money, it's a good shares from the another investors. And in primary market, where the price are be fixed and given to is in investors, and secondary market price are be determined by the supply and demand. So as I told in the previous slide, so we know that what is primary and secondary market. And second, primary market are issued for the first time, where the securities are be issued for the first time to the public, general public, in order to be that helps the companies to raise the funds. And where the secondary market, the existing securities are traded among the investors, and the stock exchange that we know, NSE and BSE. So NSE is the National Stock Exchange, and BSE is the Bombay Stock Exchange, one of the largest and oldest stock exchange. And when we know the index for this is a Nifty 50 and a BSC is for Sensex, where the top 30 companies are be traded in the stock exchange. It depends on its market capitalization flows. So, is there be any doubt so far?
Yes, Sanjay, like there is a hype in SME IPO, right? SME IPO.
SME IPO, yeah, over the counter exchange of India, where the
Yes, yes.
where they some all the companies don't have the amount to invest themselves to trade themselves in the stock exchange, where there should be some thing you want to this much market capitalization, this much of funds and to be allocated. So where if the companies can't able to trade themselves in the NSE BSE, they can go for an over the counter exchange of India, where the small medium enterprises can trade themselves and investors can buy on it.
Yeah.
Basically from yeah, there's yeah, but yeah, correct. Even though the small cap, the large cap companies is between I think yeah, it's about 20,000 and 15 to 20 and mid cap. Okay, so below five is be small cap. Yeah, if they yeah, there is some things I told you now in where their market capitalization it should be some a limit. If they can't be satisfied that they can go for an over the counter exchange of India.
So, Tamil,
Yeah,
is
yes,
this is this regulated by SEBI, SME IPOs?
SME IPOs. Yeah, it's approved by SEBI. Yeah, SME
I'm saying
IPO. Yeah.
regulated.
Oh, you're asking me.
Okay, okay.
And recently that we have heard some issues now regarding the SME IPOs are be over. Yeah, and they are being started to regulate it, and then they started to get more concentrated where they are telling that SMEs IPOs are be getting overpriced, and once it be started to trade on the secondary market, where it's peoples are be holding that for an up to they're getting 20% or 10% returns, and after they are be selling it where the price of the particular shares is be getting down. So these issues have been happened recently. So here this is the types of risks. So we know inflation's risk, liquidity risk, unsystematic risk, systematic business risk, and volatility risk and currency risk. So inflation risk is where uh, a sudden rise in the price of goods and services and reducing the purchasing power of money. And where for example, we'll say if I'll be investing 1 lakh in FD at the rate of 4%, and where my inflation rate is 7%. So see here the money that I've been invested and the returns that I've been getting, which can't able to beat the inflation, and then here that I'm facing the risk, right? And
Yes.
yeah, and liquidity risk. If for example say if I'll be invested some amount to buy the stocks and where that I need an amount immediately, but due to some reasons I couldn't able to for example say if I buy the small companies shares, but there's been no demand in the market, and I couldn't able to sell my shares. So some of the investors have been faced this situation. So we call this as an liquidity risk.
Uh,
And then
Tamil,
yeah,
is this like something about asset investment?
which is
Is this related to acid investment?
At rich investment. What is
Acid.
it? So have you understood, Yash? Because I don't.
Yes, yes.
Yeah. So unsystematic risk where the particular sector or industry is be cost in trouble, where for example we will say if I'll be invested in some company where that particular company has an poor management and they can't able to if the financial management and then the decision had been went to wrong, and then the particular industry it be get into miss, and due to that where there's some chance of my stock prices be gets down. So that's we called as an unsystematic risk which is be happened within the company, and it will be reflect to my stock share price. And systematic risk is an whole market is be getting to collapse, where we can say if there is been sudden changes in an inflations, or if there is an economic recessions would be happened, which would be affected not only the particular company, the market as whole. Even if the stocks have been performing well, that might have some chance to decrease. So
Uh,
recently, yeah.
Tamil, can I say on systematic risk as a unique risk or specific risk, and systematic risk as a whole, country risk or the macro risk, right?
Yeah, it's a macroeconomic. That's what here inflation and economic recession are in the macros economics.
Yes. Okay. Okay.
Where if something happens, for example, we know that in recently the CPI have been increased, and then old price index which in the other side also have been increased to 2.2. So which would be affected, we can say in the Indian market, but where we say in US uh, policies which would be affected the whole economies and would be caused to trouble. So we say that's an systematic risk, and where in a business risk is arising from the company financial or operational issues, such as it has an poor revenue or weak strategies. And volatility risk, we know in stock market we can't be predict that the our stocks is be going on this particular time horizon. It might be the chance where it has been more volatile, so we can't be know. So that's an volatility risk. It is then up and down. We can't know this is the price that we be get exactly. No one can do. And currency risk, for example, I would like to say this as an example in a way that I have been invested in the US market or in a European market. If the currency's valuation is b comes down compared then to the or Indian rupee, then if I'll be withdraw my money where my investment amount is also less. If I'll be invested 1 lakh something in euro, and where in a Indian rupee we say that something in lakhs, and I won't be get the exact amount what we have been invested, even though the stocks have been performed well, because their currency rate have been changed. So is there be any doubt in these types of risk? Okay.
No, no.
So market infrastructure institutions and intermediaries. So market infrastructure institution, like we know, a stock exchange, a platform like BSE and NSE for buying and selling securities, and where in um, there is a Shanghai Stock Exchange, and then New York Stock Exchange, one of the. And so these are the stock exchange which in India we are be using BSE and NNC, and there will be some other stock exchange also, but these two are said to be the famous stock exchange in India. You know how many stock exchange are being there? Other than that, there are some stock exchanges. Yeah, yeah, correct. But
Calcutta Stock Exchange.
yeah, there be, yeah, these two are be the major one. But there are be 21 plus 2 stock exchange as of now, where 21 is be currently operating, and the 2 is be gonna to shut. Uh, it already shuttered, I think so. Where I've been studied 2 months ago, they told that it's gonna be shut in another 3 months. No idea, but in we used to say 21 plus 2, and then the clearing of,
Tamil.
yeah.
Hello. Tamil, is this OTCA also exchange? OTCA, over the counter exchange of India.
Yeah, you're telling me
Okay.
that also the exchange.
Yeah, yeah, OTCEI, over the counter exchange of India.
Yeah, we can also be considered that, but where we have been written all those exchanges, we have not written the OTCI.
Okay, 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 okay. Yeah, yeah. I think it's regulated by SEBI only because in this exchange, gold are exchanged, gold are traded in over the counter, and currency are traded.
Yeah. So as
Okay.
you told before, OTCI, which is B, if they sell their shares to the public, and it should be they regulated by the SEBI. Na? So
Yes.
yeah, so that's be the answer. So over the counter exchange, we can be also added into this, but where uh, it it as in it also been mentioned in this, but where in country stock exchange, every country has this own stock exchange, and over the counter exchange of India doesn't be included in this.
Okay.
And the clearing corporations, we know in NSC there is a thing called NSCCL, and where for BSC it's for, I think ICCL. In depositories, we know clearing corporations where the settlements it be happens between the buyer and seller, so they comes for the clearing the transaction between these two. And depositories that we know NSDL and CDSL, National Securities Depository Limited and Central Depository Securities Limited, and where we know what is depository is. So in the starting, before also during started before the first session, we have been discussed about the what's the difference between trading account, a demat account, and bank account. So if you have this three account only, you can be able to trade in the stock exchange to buy and sell shares. So what's the difference between these three? Yeah, depository is just to show the shares that what we have been bought. Even if our brokerage app also if got shut, and way that we can be retrieve our shares from the depository limited, either in a CDSL or NSDL. Yeah, and then the trading account. Yeah, where we can buy and sell shares. Yeah, and then the normal bank account that we have no where that we attach into the brokerage app that we are preferred to, and where we can invest the amount that we plan to invest, and through the brokerage app, we can buy and sell shares. And market intermediaries. So, yes, told this brokers and sub brokers and portfolio managers who assist in trading and investment process.
Tamil.
Yeah,
Yeah, we will be having like great session on this for 1 hour. It
sorry.
is only it is only a basic session, okay? Like we'll be having 1 hour session for this.
Okay, okay, but where I think that I've been created nearly.
No,
Okay,
no,
okay,
I will be doing it
okay,
because there are many market participants like stock exchange, clearing corporation, depositories,
okay.
clearing, but custodians. Okay,
Yeah,
custodians, many are there. I will be telling about it. Okay, fine.
Okay, so you
Continue.
want me to tell this and then a basic, don't want to be go in depth.
Okay, yes.
Yeah, okay, understood.
Continue. Continue.
Yeah.
Continue.
So here that how to mitigate the risk, and in order to be mitigate our risk, we know that we go for a diversification and investing based on the financial goals and risk tolerance. And if we put a stop loss, it will be helps to goes and potential losses. Even in trading, they used to do this. They put on stop loss and they prevent their loss from going down. And a way that if you regularly monitoring and reviewing your investment portfolio, if you think if your one of your shares in a portfolio have been not performed well, you just want to be monitored in regularly and make some adjustment in it would help you to mitigate the risk. And even when we invested in the foreign country, I'm just telling this, whereas in a company called ABC, if they invested in the foreign country, they should want to analyze before they have been invested in there. And if they want to mitigate the risk, they go for an there is an some insurance is be for there if something is unsuddenly happens, unsudden events happens. So here the question for the finance enthusiastic that have been uh, prepared while creating this PPT. So here the question is, what is the difference between the private placement, a right issue, and a preferential allotment? So shall we discuss now, or we can be discussed once the uh, presentation finish?
We can like discuss after presentation.
Yeah. So this is the process of then opening the Demat account. So steps to open a Demat account is you want to choose the depository participants, as we know, CDSL or NSDL, which you want to, and submit your documents. Uh, know your customer, so ID proofs, address proof, and PAN card, and complete the verification and fill the application forms and link the Demat account with the trading account. And the basics are, yeah, okay. Yeah, this what are the things that I've been covering as of now. This is what is been investor certifications. And it's be really 30 topics are being in this. Yeah, this is also one of the part of it. Account opening and process, a basic service of a demand account. If you are the persons uh, who have been invested in the securities of up to 50,000, you don't have any maintenance charges. If you have 50,000, 1 to 2 lakhs rupees, where you want to be pay 100 rupees per year, they have been get deducted from your brokerage account. And the basic service which is being given to your brokerage app or account statement alerts and other features, and where even depository limits also, like NSDL and CDSL also provides these services to you. And most of them are brokerage service will be give this information into your email. They sends the your portfolio performance on every week or month or yearly. It depends upon the brokerage app. So here the power of
Kamil,
attorney. Yeah,
Kamil, I think there are two brokers, right? Discount broker and normal broker.
where in at where discount broker and normal broker.
Yeah. I think there are types of brokers, like they are discounts broker and normal broker.
Yeah, when we turns into the digital ones, those brokers uh, wants to be no long more now. Uh,
Okay,
now
okay, I'll
the
be telling you.
yeah,
I'll
yeah,
be
okay.
telling you.
Yeah, okay.
Okay, so I think I don't know. I will tell you. Like
Yeah.
discount brokers are those who do not provide about the report. Okay, they don't provide report or they don't provide about updates.
Oh,
But
those
like
normal. Okay.
yeah, they are normal brokers are those brokers like Motilal Oswal. They provide us report about tips also. They provide also tips and equity research report also.
Oh, okay, understood. But
Okay.
here that have been they have been mentioned anything in that the things that which is being sent by the PDF of their website. I'll gone through it and
Okay.
let you know. Yeah.
Okay.
And the power of attorney and nomination. Power of attorney, we know the broke. the investors wants to know his rights, and if something be happens with the brokerage apps, that he should know what are the things he could wants to be protect himself from the uh, uneventual events what's happened. And nominations that we know, uh, if something happens, or if after me I should want to nominate someone else who take care of my shares, and it's either be your blood relations or your family members. So investment through IPO, we know the process of IPO, where the companies have, after they finished the evaluations at all, they have been invested in with some book building process, or they have been mentioned the specific time zones, time horizons, and after it be listed into it, people have started to bid for the particular share. And where it's be in IPO, we used to say that in a lot people should purchase in a lot, where the maximum lot size is in 13 or something thing. So as per account, we know applications uploaded by blocked accounts. So for example, we say that I applied for the ABC company, and once that have been applied, the amount are being get rid of my bank account, and it be get stuck within in the middle. And once if I be get a translate got an allotment, it be moves out of my bank account. If I don't get an allotment, it be returned to my account. So that's we called as an asbar. Usually it be takes 3 to 4 days to came back to your bank account. So is there be anything you have doubt in asbar? Because asbar, it's an transaction where the uh, during the allotment they won't allow the checks at all. So as per the procedure, like I say UPI. So is there be any doubt on this?
None.
Yeah. So trading days and the settlement cycle. So trading days that we know, usually it be Monday to Friday, expect the public holidays, and market opens at 9:15 to 3:30, and the pre offer sections is be starts from 9 o'clock. And the settlement cycles are T+1 and T+2, meaning the transactions that settle once or 2 days after the trade date. So contract note and margin money. So contract note, we know that it records the trades executed by the broker, if on the behalf of an investor. And where the margin money, let's say there should be some limited amount in my uh, Demat account. If I should wants to borrow some shares, but if where I don't have enough money to buy that, so where I go for an debt to get an some amount if in my Demat account, and once I have been gained, I'll just repay them. So that's what's on margin money. I don't have a sufficient amount with me, so I'm borrowing from my brokerage app.
Tamil.
Yeah.
I have not understood about contract note.
Contract note. Oh yeah, okay. So contract note, if once the trade is executed, and then on the behalf of the investor, the broker can gives what the things have been happened. Yeah, there should be
Uh, is this a purchase and sales receipt over our shares?
yeah, yeah, correct.
Okay.
Yeah, as you have said in childish play, childish word, it's yeah, purchase and receipt. What you have been
Okay.
exactly. So derivative market and its types. So derivative markets, we know that a trading platform, and where the types of derivatives are futures, options, forward, and swaps, where that you are being obligated or not obligated in be in the future, and you get even you buy the shares. So where we all discover this in the previous slide. So mutual fund and its types. So mutual fund is a pool of money from an investors, and where it's be handling by the fund manager, professional fund manager. And the types of mutual funds are equity, debt, hybrid, and index and sectoral. And then some other funds are be also etc. So equity funds is be only be face on equity, and debt it's be only invested on the bonds and debentures, and hybrid it's be the mix of both equity and debt, and the index fund is like as an Nifty 50 Sensex or BSE 500 like that, and sectoral fund where it be focused on the particular sector, whether it's been an steel or pharmaceutical like that. So here there are another questions. The ETF, we know exchange traded fund, where the mutual fund and ETF are being transit like the same, where it be get an amount from the pool the amount from an investors and be start be invested on it. So here that I have been asked the question, what is a exchange traded fund and how does it be differ from the mutual fund? So we can be discuss this in or in one, where we have as of two questions. One is which we have been seen in the previous slide, and another one is this. And some SEBI compliance redress system. We in short form they say as this and scores. If you have any complaint against the platform that you have been using, or some other problem issues have you have been faced while you have been investing, you can be say in this online platform is be totally be regulated by the SEBI, as the name suggests, an online platform for filling investors complaint against listed companies or intermediaries. So here the intermediaries they say is either is be your broker, sub broker, or their portfolio managers or whoever it wants to be. And features is easy to access and file complaints and ensure timely resolution and transparency. Yeah. Thank you for listening. So if you have any doubts that you can ask. Yeah.